Right, morning everyone. How are you? Nice and early here today. Okay, so for the next 30 or 40 minutes or so, I'm going to give you a bit of an overview of the Saudi Arabia projects market, what's going on there, how the situation has been over the last couple of years, and then looking forward, what we think the major opportunities and challenges will be, as well as giving you a little bit of data around what could potentially happen next couple of years. Now, for those of you not familiar, I work for MEED, or more specifically MEED Projects. We are a project tracking service, so we track all major projects in the MENA region and East Africa and Central Asia. And by tracking these projects, we are able to quantify what's the different trends, the sizes of markets and sectors, and able to understand what's happening going forward, and of course produce presentations like this. So most of the data in here today is taken from the MEED Projects service. There's a lot of data in this presentation. There's a lot of information. Don't feel you have to try and record everything or note everything down or remember everything. I'm sure the slides will be available to you. And alternatively, if you wish to get them faster, just give me your card afterwards, and I'll try and email them to you later today. So, without further ado, let's start looking at the projects market today, both in the region and with a focus on Saudi Arabia. Now, before we start anything, we need to take a look at this rather important slide around the oil price. Now, this is where we were a few years ago, up until about summer of 2014. We had oil running above $100 a barrel. That meant that the governments in the region, which are very dependent on oil and gas revenues, had very high spending. They could afford to spend a lot on projects and other government expenditure in other sectors. But then suddenly, in the middle of 2014, and very unexpectedly, oil prices started falling. It fell from $100 a barrel to $30, $40 a barrel. And then in 2016, in January of that year, it fell as low as $26 a barrel. Now, the oil price has been steadily creeping upwards in the last few months, and until recently was around $70 to $80 a barrel. Still a little bit below 2013-14 levels, but nonetheless creeping upwards. Now, unfortunately, in the last couple of weeks, we've had a record fall in the oil price to the extent that it's now trading at around $60 a barrel. So we've had a bit of a slip up in the last couple of weeks, but nonetheless, the recent trend over the last 12, 18 months has been an upward movement. But when the oil price falls, that means the governments earn less money, and it also means they have less money to spend. Now, here in the Middle East region, as I'm sure most of you know, most project spending is funded directly by the government. So if the government has less money, it tends to spend less on projects, and the result is this. So this graph shows you the value of contracts awarded in the GCC, 6 GCC states over the last 5 years, 6 years or so. And we can see the clear impact that the fall in the oil price has had on project spending. So here we are, 2013, 14, 15, oil is above $100 a barrel. Project spending about $160 to $180 billion a year on new contracts across the sectors in the GCC region. Oil price falls excuse me, from $100 a barrel to $40 a barrel, and project spending has fallen as a result. In 2016, project spending dropped from $178 billion to just $113, and last year was barely better, $120 billion. So we had a 40% fall in the size of the projects market in the GCC. And clearly, for anyone operating in the project supply chain or the projects market as a whole, suddenly the projects market has shrunk quite considerably. And so for the last 2 or 3 years, it's been a very difficult time for a lot of companies, not just in the project space, but across the board in the region. So let's take that same data and look at how it's impacted countries individually. So historically, the 2 largest projects markets in the GCC have been, perhaps unsurprisingly, Saudi Arabia and the UAE. You can see that Saudi Arabia, which has, of course, the biggest economy and population, was running at $60–70 billion a year of contract awards, and suddenly in 2016–17, it collapsed by more than 50%, you can see here, to just $20–25 billion. Same story in Qatar, collapse in project spending, Oman, and Kuwait. So suddenly, a huge chunk of the market disappeared for contractors, consultants, suppliers, and so on. The only market to have really been stable over that time is the UAE, thanks mainly to Dubai and the real estate sector there. Of course, Dubai isn't dependent so much on oil and gas. It doesn't have oil and gas reserves, or much oil and gas reserves of its own, and therefore over the years has diversified its economy, its clients, the key real estate developers have their own revenue streams, and therefore is less dependent on the oil price. Most projects in the UAE, in Dubai, aren't funded directly by the government, so it has enabled the projects market to remain fairly steady here. But as you can see, elsewhere, pretty difficult times. Now, again, the same data, but let's look at it by sector, and we can see that, again, historically, the construction sector, civil construction, so buildings, villas, towers, infrastructure, malls, hotels, schools, hospitals, and so forth, is by far and away the largest single sector in the region at between $50 and $70 billion. But you can see just how much that sector has also shrunk due to the fall in oil prices. Next up, we've got transport here. So transport would be airports, ports, roads, airports. And again, you can see we had a lot of spending, 13, 14, due to the Riyadh and Doha metro projects. But since then, as you can see, also affected by the oil price. Oil and gas tend to ebb and flow. There are fewer big contracts in these sectors, and the national oil companies tend to look at a much broader 5-year horizon and cycle for their spending. Therefore, you get some big dips and troughs and peaks in those sectors. Power, as you can see, is a fairly stable sector because it's driven by growth or demand growth from population is fairly steady, and therefore investment tends to be fairly stable also. So how have we done this year? Now, at the end of last year, we were expecting this year to be pretty good. We had already rising oil prices, there was optimism in the air, and the expectation would be that 2018 would finally see a recovery after 2 very difficult years. Now, this graph shows you the year-to-date spending on contract awards and project. And when I say year-to-date, I did this maybe a month ago, so we have 2 months left in the year. And the contract award total, as of that point, is about $73 billion. It's now about $85 billion. But nonetheless, we can see here that last year, project spending was $120 billion and $113 billion in 2016. And this year, so far, with a month or 2 to go, we've got $85 billion. So on a pro rata basis, this means that we are probably going to end up 2018 at about $100 billion to $105 billion worth of contract awards. So that's actually worse, and considerably worse, than 2017 and also 2016. In fact, this year, unfortunately, is, in terms of new contract awards, is going to be the worst year since at least 2004. So despite those rise in oil prices, despite all those government announcements, despite the sort of higher budgets, but this hasn't translated into increased project spending. Of course, the picture is slightly different on a country-to-country basis. So we can see here, actually, that UAE and Saudi Arabia are on track to meet last year's levels, or even slightly exceed them. But it's actually in Bahrain, Kuwait, Oman, and Qatar where spending is well down on last year and the year before. Now, the issue really is that despite these being stable, a little bit ahead, they're not able to offset the falls in these other markets. So as a result, we are, unfortunately, as I said, not seeing an improvement in the overall spending conditions or the projects market this year. And we can just see that in another way. So 2015, when the last year of good spending levels, and then the slump in 16, 17, and although it's year to date still, you can see that these two markets will probably hit last year's numbers, but you can see Qatar, Oman, Kuwait, Bahrain are likely to be well below the figures recorded in the last couple of years. So, unfortunately, a pretty bleak review of this year. We're going to have to put it behind us, and then we're going to look forward. And just from a construction perspective, you can see that all sectors in 2018 have been hit. No one sector is likely to beat last year's numbers. Everything is down. Okay. Now, where is this money being spent precisely? Yes, on a country-by-country basis, obviously there's an interesting focus, but clearly in somewhere like the UAE, where you've got different emirates, in Saudi Arabia, we've got different, very different regions and provinces. There's going to be a big difference geographically. And we can see here, based on year-to-date spending, that Dubai is by far and away the single largest projects hub in the GCC region. As I said, it's powered by and driven by the real estate sector, so it continues to excel. And second place, we've got Abu Dhabi. Now, Abu Dhabi has had a difficult couple of years. It's also been hit hard by the slump in oil prices. It is a market where the government is still very much driven by the oil price and oil revenues, so it's had a difficult time. But in this year, it's actually seen a big jump in project spending, mainly due to return of activity in the oil and gas sector. There's been some big contracts awarded, and as a result, we've seen Abu Dhabi now move up into second place here. But you can see how the UAE, just these two markets, dominates the projects market here in the region. Third place, we've got the Eastern Province, which is an oil and gas market. It's the area around Daman, Al Khobar, where most of Aramco's project spending is given. And then Tabuk, where NEOM is. We've already seen some initial contracts awarded there for residential, royal residential projects. Mecca, and then Doha, Riyadh, Button and North in Oman, Sharjah, and then Al Asima in Kuwait. So we can see here that it's almost entirely driven by the UAE. Other spending levels in other areas and regions is much lower. So we've got a focus today on Saudi Arabia, so let's look into a bit more detail about the Saudi Arabia market. So as you can see, as we've seen already in the previous slide, Saudi Arabia historically has been the largest single projects market in the region, as you would expect, largest economy, largest population, largest area. And from 2009 onwards, pretty good market. 2007, 2008, we had the real estate crash that happened at the end of 2008, and the market, which was previously up here, a lot of projects were cancelled and put on hold, and the end result was that ultimately, in terms of active projects and completed projects, the values were much lower. But we saw a quick recovery, so all swimmingly well until 2015, and then 16, 17, 18, much lower. Now these graphs are split by sector type, and you can see that construction, generally speaking, this sort of purpley color, is generally speaking the largest single area of investment in a project sector in the kingdom. There's a lot of investment in, obviously, in social housing and affordable accommodation for a young, fast-growing population, which also needs a lot of investment in schools, in hospitals, in universities, and that's the mainstay of project spending in the kingdom. But of course, as we know, it's the largest power sector in the region. Look at the green. Investment in power in Saudi Arabia is enormous. We're moving away now from conventional thermal energy, oil and gas-fired power plants, to renewable energy. The first wind farms, solar farms are now appearing in the kingdom. And we're also on the verge of having a nuclear energy program there too. Transport. Now, Saudi Arabia is a large, it's a huge area. It's larger than Western Europe. And therefore, investment in roads has been enormous. So a lot of this is in new road construction, but also we've got modernization of the airports in the kingdom. And of course, we've got, in this year, the award of the $30 billion Riyadh Metro, which is nearing completion. Now, the interesting thing about Saudi Arabia, say compared with Dubai, is the diversity of the projects market. It is a market that it has opportunities across all sectors, whether it's industrial, petrochemical, construction, transport, or power. It's an area of opportunity for everyone. And that's what makes it such an exciting market, say compared with UAE or Dubai, which is mainly a real estate play. So just to translate all that data into individual projects, just give you a taste of the type of contracts that have been awarded just in Saudi Arabia this year and the sort of size of the projects. We've got, as I said, housing is a major challenge in the kingdom. When you've got 50% of the population under the age of 30, there's a big demand for housing. So we've got a $2.5 billion housing project in Mecca. It's one of the largest contracts. Industry, major a push to attract foreign investment in the kingdom. So one of the big projects awarded this year was a tyre plant in Jubail. We've got palaces being built at Sharma in Neom. We've got an ammonia plant in Ras Al Khaimah, and of course we've got some big oil and gas packages at the gas compression plants here and here and here. And of course, with Saudi Arabia, we've got a massive investment in water. Now, most water, drinking water in Saudi Arabia comes from desalination. Of course, the desalination plants are on the coast, but a lot of the population centers are inland. So there has to be a massive investment to get that drinking water, desalinated water from the coast into the inland areas. So large investment in transmission systems for water, but also sewerage, wastewater provision and treatment. That's also a very major target sector in the kingdom right now. So you can see a lot of different sectors and activities going on. And out at the bottom here, we've got the first major utility scale solar power plant in the kingdom. Right, what about in terms of announcements of projects or new projects coming to the market? So yes, of course, we've had a difficult couple of years, we've all seen that, but actually the level of activity in terms of new projects being announced hasn't really dipped. So we've got a fairly stable, about $100 billion a year of projects being announced or being added to the pipeline. Of course, 2017 was massive, mainly due to the addition of the $500 billion NEOM project, but even if I took that $500 billion off this, we'd still be at above $100 billion for last year. So despite the slowdown in project activity, we've actually got still a pretty good years in terms of announcements of new projects, in terms of new projects being added to the pipeline. Okay, I'm not sure if you can read this easily, but this is the top value, this is the top 10 contractors in Saudi Arabia by value of projects under execution today. The largest contractor by some way is Saudi Bin Laden Group. Now, Saudi Bin Laden Group, or SBG, has been struggled in recent years. It was the government's favored contractor, not so much these days, and this number, or its ranking, is expected to decline quite rapidly over the next 12 to 24 months. We've got ABV Group and Nesma and Partners in second and third place, two very strong local contractors in the civil construction space. Then we've got international EPC companies like TR, Técnicas Reunidas, and I'm struggling to read this I can't read that, GS? No, Elsafe, Engineering Contracting, Saipem, China, Sepco, never mind, Larsen Toubro, Siemens, and so on. So you can see it's a collection of local contractors, international contractors across different sectors and spaces. Right, who are the top 10 clients in Saudi Arabia? Now, Saudi Arabia, like most countries in the GCC, is very much dominated by the public sector spending, and therefore most clients are government organizations. We've got Saudi Aramco, perhaps unsurprisingly, is the largest single client in the kingdom at more than $45 billion worth of contracts underway. We've got the organization in charge of the development of the Grand Mosque in Mecca, in second place. The Ministry of Interior, which is in charge of some defense compounds, as well as some housing works as well, 25 billion. The Riyadh Development Authority, which was responsible for projects, civil projects within Riyadh, including the Riyadh Metro. Saudi Railways Organization, SRO, which is building the railways in the kingdom, and so on. But you can see they're all pretty much government-financed government companies. So we've had enough looking backwards and looking where we are today. Let's start looking forward and seeing what's coming up next in the kingdom. So when we are looking at the outlook, of course, the oil price is going to be a critical factor. As we've seen, the oil prices fall, government spending falls, oil prices go up, government spending can also go up. But in addition to that, there are other factors as well that are impacting the project spending. Now, a couple of weeks ago, the government announced made a pre-budget announcement saying that it was going to increase expenditure to record levels next year. And so that's made everyone very optimistic that a lot of that will trickle down into project spending. So a lot of it, of course, will depend on government commitment to pushing ahead with its economic reform program, investing in infrastructure and projects. So clearly, a lot of eyes on the official formal budget and also what the government is planning to do. Oil price, as I said, is going to be critical. $70 a barrel is fine to help government balance the budget. But should oil continue its fall to 50 or even lower dollars a barrel, then that might have an impact on project spending. Now, clearly, also, what's going to have an impact on project activity or spending or foreign investment is the recent political events and how that impacts investor confidence in the kingdom. It's too early to say, really, but we're fairly confident that the market will push on ahead regardless. And then we've got a number of major infrastructure projects in the kingdom which are just waiting for the government to approve. Projects like the Mecca Metro, the Jeddah Urban Development Plan, the new Bahrain Causeway, the Nuclear Energy Program, GCC Railway, and so on. All of these projects have been intended, been evaluated for some time now, and we are waiting for them to proceed and the government to give the go-ahead. And should these projects, which are ready, should they get the green light, then we can be very positive for 2019. So we had VAT of 5% introduced for the first time in the kingdom, and that no doubt had an impact on spending levels and private sector confidence. We'll have now into the second year of that, and hopefully contractors and the project supply chain will have adjusted to that, and that should have also a positive impact on the market going forward. And then, of course, we've also had changes in visa regulations and fees and so forth for expatriate labour. There has been an exodus of foreign nationals, labour from Saudi Arabia. When that happens, there's an impact on things like real estate pricing, on demand for utilities, obviously retail and so on. And in turn, that means that some projects which might have been necessary before are not so necessary going forward. Projects like new power plants, substations, new low-cost housing, and so forth. So we'll see how that pans out. PPP. Everyone talks about PPP in the region, getting the private sector involved in projects, funding them. But the reality is that outside of power and water utilities, power and water generation, and also airports, PPP hasn't been a success in the region, and very, very few projects outside of those two key sectors have worked out. And indeed, my personal opinion is that PPP in the region is really going to be very, very difficult to implement. Nonetheless, getting the private sector more involved and therefore reducing that dependency on government spending and the oil price is key to getting that sector back to the projects market back to growth again. We've also got other issues like liquidity issues, cash flow, late payments. If the government can to reduce these bottlenecks, get those payments flowing again, that will certainly help the projects market there. Right, so just to again re-emphasize just how critical the oil price is. So this year we've had $72 a barrel average oil price. In 2015-17 was just $50 a barrel. And these are the budgets, the break-even points for each country in terms of what it needs the oil price to be in order for them to balance the books. So here we are at $50 a barrel, which we were in 2015-17, and this is this year in 2018, and we can see that at the $72 a barrel range, most countries in the region, if the columns are below that, means that the oil price is high enough for them to balance the books. So Kuwait, Qatar, Saudi Arabia just about, UAE, Iraq, Iran, Algeria, all based on their budget announcements are able to balance the books, have no deficits, indeed even surpluses at $72 a barrel. On the other hand, if oil was at $50 a barrel, you can see only Kuwait and Qatar would be able to avoid the deficit. On the other hand, you've got markets like Bahrain, Libya, Yemen, Oman, need oil even higher than $72 a barrel average this year. They need it above 90, even above $100 in some instances. So it just goes to show just how critical that oil price is. All right, again, now let's look at some individual projects. As I said, there are a number of projects and contracts in Saudi Arabia where the tenders have been issued, the bids have been submitted and have been evaluated, and we're just waiting for the government to approve them. These are just a selection of some of the biggest ones. And some of these have been awaiting award for actually quite some time now, like the Jeddah Public Transportation Program, Mecca Metro Project, Solar PV Project, what else? The King Salman Maritime Complex, the Uphill Suspension Bridge, the Avenues Mall. Again, we've got a good, $20 billion plus of contracts just waiting to be awarded at any point. So, a lot of this just getting the government to agree on these projects, approve the spending on them, and there's already a large pipeline of projects that could be awarded at any moment. What about projects in tender, where the tender's been issued, waiting for the deadline to hit and people to submit their bids? Well, we've got projects like Saudi Land Bridge, the Jubail 3 IWPP, the Red Sea Tourism Project, a few oil and gas projects for Aramco as well. Across different sectors, we've got a number of large projects which, because they're in tender, and some will be submitted very soon, there's a very good likelihood that these projects could be awarded in 2019. Just a sample of what some of the biggest ones there. Right, what about longer term? So perhaps not awarded next year, but give an indicator of the size of the ambition in the kingdom. Well, the largest one of all is NEOM, at $400 to $500 billion worth of contracts, but generally speaking, that's going to be over 20, 30 years. So still some time away. The nuclear power program is something that could happen over the next 12 to 18 months, very significant project. Another one in the next 2 years is the Ambu crude oil to chemicals project, which is something that is perhaps one of the largest oil and gas investments ever made. Huge project with SABIC and Aramco and JV. A housing project, Dahiyata Firsan, as well, is another key program. The renewable energy program, solar and wind investment using the private sector. High-speed railways, Faisalia City, which might feature a Disneyland. Rural and more housing projects and redevelopments in Medina and Mecca, and so on. So a huge raft of projects coming up, and this is just a selection of them, just some of the top selected ones. And then, of course, you've got multiple projects in the oil and gas sector. Just to give you a sample of some of them, gas oil separation plants, offshore drilling, platform work, pipeline projects, compression systems, and so on. A lot of different projects there. Okay, who are the top future Saudi clients in terms of future known spending? Well, the largest single client by a long margin is the Saudi Public Investment Fund, or PIF, as it's sometimes better known as, and that's the government wealth fund, which has been now tasked with funding and driving the development of major projects such as NEOM, the Red Sea Tourism Project, Qiddiya, and so forth, and that's got more than $500 billion worth of projects known today in the pipeline. We've also got the nuclear energy program under the KCARE. We've got Aramco. We've got the Metro, Jeddah Metro Company. We've got the Ministry of Housing, Saudi Electricity Company, and so on. Again, as we've seen in the past, very much government spending, government bodies, very little sort of private sector spending there. Very much in the hands of the government. Now, what about the projects broken down by sector? Well, construction is the largest single sector going forward, as it has been in the past, at more than $776 billion $770 billion worth of known unawarded projects in the pipeline, but also transport, particularly in roads, in railways, and in airports, $235 billion. Power, massive increases in demand for power generation in the kingdom, and that's reflected by this figure, $142 billion. And then we've got $17 billion of oil projects, $15 billion of industrial, 10 of gas, $50 billion of petrochemical projects, and $16 billion of water. So we've got a massive pipeline of future projects in the kingdom. Where's all this spending that we know about today? Where's all this spending going to be located? Well, as you can see, Tabuk province, that's the northwest of the kingdom, near the Jordanian borders and the Sinai province. This is where NEOM is going to be, so a large chunk of that is going to be NEOM, but it just gives you an indicator of a rather remote and undeveloped region at the moment. It's going to be turned into a projects hub. The Mecca province, which includes Jeddah, nearly $300 billion worth of project spending coming up. An undefined area, which is basically where we're not able to, at this point, to select exactly which region it's going to be in, probably because it covers multiple regions. Then Riyadh, the eastern province, which is mainly oil and gas, Medina, Jizan, and then other provinces. So you can see that Saudi Arabia is going to have spending across different parts of the kingdom. Right, now in terms of the forecasting, how we expect the market to perform over the next 5 years or so. Now, this is for the GCC. If you remember, in 14, we were at $170 to $180 billion worth of contracts awarded. This year, we're likely to see only, well, last year was about 120, and we're likely to hit, actually this year, about $105 billion. So this forecast gives you a range between here of where we expect project spending to be over the next 3 or 4 years. We're on a worst case kind of scenario this year, and we're hoping that next year we can reach to a kind of best case scenario. But our forecast is that we will see between $100 to $140 billion worth of project spending in any given year over the next 3 or 4 years. Of course, many variables there, depending on the oil price, geopolitical situation, but that's based on the pipeline, based on historical correlations, that's what we are expecting. So even though we've had a difficult couple of years, actually we've still got a tremendous pipeline of projects still to come. In fact, we've got more than, $2.5 trillion worth of projects in the pipeline in the GCC region. Now, I know a lot of you are probably thinking to yourselves that that's never going to happen, $2.5 trillion of projects. But bear in mind, over the last 10 years, 15 years, we've seen already more than $2 trillion worth of contracts awarded in the region, actually physically awarded, being built or finished in most cases. So it's not unrealistic to expect another $2-3 trillion in the pipeline. The other important thing to bear in mind is that even though we've had a difficult couple of years, we haven't seen a wide-scale cancelling or postponement of, wide-scale cancelling of projects. So the need and demand for projects, both in Saudi Arabia and in the region as a whole, is still very much there. The population is growing, economies need to be diversified, the oil price is on the rise until recently, a huge demand for social housing, education, and medical facilities. There's still a very big demand for investment in infrastructure. And so I think that's reflected in this figure. Now, Saudi Arabia has historically been the biggest spender on projects and is going forward going to continue to be the biggest one at $1.2 trillion. Even if I took NEOM off that, we still got more than $700 billion worth of projects in the pipeline in the kingdom. Next up is the UAE at more than $700 billion, still a very attractive market here. And then we've got lower down, but still large markets, Kuwait, Oman, Qatar, and Bahrain, running between $150 and $200 billion a year of known future projects. Now, sure, not all of this will happen over the next 5 to 10 years. Of course, some projects will get delayed and cancelled, but bear in mind, even if only half of this happens, that's still $1 trillion worth of known projects. And of course, this data doesn't take into account projects which we don't know about today, projects which will be announced tomorrow or next week or in 2 years' time. So in reality, this graph is going to be fairly stable for the foreseeable future. And despite the difficult times we've had, we can still be assured that there is a long pipeline of future work still to come. Same data, look at it by sector. You can see construction, but not really surprisingly, has been the largest, historically, the largest sector, is going to maintain that position going forward, more than nearly $1.5 trillion worth of projects in the pipeline. Next up, we've got transport, close to $500 billion, power, $236 billion, oil, gas, and so on. It's also important to bear in mind when we're looking at numbers like this is that there's a lot of visibility about future transport and construction projects. There's much less visibility about future oil and gas contracts or projects. So these numbers tend to be undercooked, and these numbers tend to be quite high because they reflect projects which are going to be awarded over the next 10 to 20 years in many cases. So in reality, these will be higher, these might be a bit lower. Okay, so for the outlook, really, I think in terms of Saudi Arabia, the key determining factors going forward at how the market performs will be, of course, the oil price, will be, of course, government commitment to increasing spending and the budget when it gets announced in the next few weeks. So we can be hopeful that with oil now having been rising for the last 12, 18 months or so, we can be confident that the government now has greater fiscal reserves to increase project spending. But that's going to be the critical factor. What else can impact the project market? As I said, PPP, getting PPP working, getting the right regulations, the right expertise and laws in place to make it work. That's going to be a key criteria for some major projects like the railways program, for example, in the kingdom. As well, getting projects like NEOM off the ground, projects which depend less on government spending and much more on private sector and international investment. This is very much down to investor confidence, geopolitical situation, and again, will have a big determining impact on the outlook for the projects market over the next few years. Across the region as a whole, it's difficult to see rapid improvement or any improvement really in Qatar and the Kuwait projects markets. Qatar has made most of its investments now for the World Cup, and therefore is entering is focused much more on delivery. It has got a new energy program coming up in 2020 that's going to have a positive impact on the market, but other than that, it's going to be fairly slow. Kuwait, for different reasons, mainly political, has always underperformed really Kuwait, but it's difficult to see that picking up as well over the next couple of years. It's going to remain quite quiet. Oman has also been historically quite a small market and is not expected to rapidly change over the next few years. However, the focus will definitely be on the Duqm industrial hub, the new refinery and petrochemicals facility there, and a large amount of Chinese investment is being made there, and that's going to really dictate how that market performs going forward. After a slow couple of years, we've seen Abu Dhabi. Abu Dhabi has been pretty slow, but over the next couple of years, we expect it to really ramp up and get back on track. We've seen some big oil and gas contracts awarded this year, and we expect that to continue. We've also seen the Etihad Rail being brought back. In fact, financing for that was agreed just last night. There's a tender out for the Abu Dhabi Metro, which was on hold for many years. It now looks like it's back on. There's announcements about the world's largest petrochemical project, so that's all also quite interesting. So Abu Dhabi is expected to, I think, do quite well. And I also expect over the next few days we might see an announcement about the Sheikh Zayed National Museum being awarded there as well. That's been delayed for a long time. And most of all, I think there's a lag between oil prices and project spending. If we look at 2015, now oil price started falling in 2014, but 2015 saw record project spending levels. In other words, there's a lag between the impact of falling oil prices or rising oil prices and project spending. A lag of about 12 to 18 months. We've now had 12 to 18 months of higher oil prices, and therefore, with that lag now over, we should expect improved project conditions and increased spending over the year ahead. So just finally, just to give you turn all those words and data into actual physical visualization of projects. This is a big project coming up, which is the King Hamad Causeway between Bahrain and Saudi Arabia. We've already got the King Fahd Causeway, and now we've got to have another one, railway and road connection. Again, using the private sector, hopefully, to invest in this project as a PPP. This is coming up. There's a tender already out for the transaction advisory services on that. Another big project, of course, is NEOM, which everyone's talking about. This is the Tabuk province. This is Sinai Peninsula. This is Egypt here. And you can see in Saudi Arabia, we've got a massive 500 square kilometer area, completely undeveloped. The idea is to invest $500 billion over coming 20 years to create a tourism and leisure hub, really transforming Saudi Arabia there. This is Qiddiya, which is like an entertainment, massive entertainment city near Riyadh. This is a significant $50 billion investment, building theme parks, entertainment destinations, which of course is an area in Saudi Arabia which has been underinvested, underdeveloped, completely new tourism destination there. So that's going to be interesting. Funded by the government, this one, so we'll probably proceed more rapidly. Just for oil and gas aficionados, this is a major offshore investment program, the Marjan field, huge number of new wells being developed, gas oil separation plants, pipelines to shore where there's a gas treatment plant at Tanajib, and then return pipeline for water and wastewater to re-inject into the wells. $20 billion program. And a new type of sector which is always developing. We're talking about new solar projects coming up, talking about new wind farms and so for the first time in the kingdom. Also for the first time in the region, and as in Saudi Arabia, is a pumped storage hydropower project. This one is at Magna in the far north of the kingdom, where they use a reservoir of water to using its potential energy to power turbines to create energy. And at night, the water is then pumped back into the reservoir and a cycle is repeated. So this is a very interesting new project, new sector coming up in the kingdom. And that is that. Thank you very much for your attention. I hope you found that interesting. Again, if you do want this presentation, just I'm sure the organisers will be happy to email it to you or make it available to you. Alternatively, just give me your card and I'll be happy to email it to you later today when I get back to the office. And I'm not sure if we have got time, but if anyone wants to ask any questions, either now or on the sidelines afterwards, I'll be more than happy to help. Thank you very much.